Good morning, ladies and gentlemen. Welcome to Ser Educational's video conference to discuss the results for the second quarter 2024. This video conference is being recorded and the replay can be seen on the company's website, ri.sereducational.com. The presentation is also available for download. We inform you that all participants will only be watching the video conference during the presentation, and then we will start the Q&A session when further instructions will be provided. Before proceeding, I take this opportunity to reinforce that the forward-looking statements are based on the beliefs and assumptions of Ser Educational's management and current information available to the company. These statements may involve risks and uncertainties as they relate to future events and therefore depend on circumstances that may or may not occur. Investors, analysts, and journalists should be aware that events related to the macroeconomic environment, industry, and other factors could cause results to differ materially from those expressed in the respective forward-looking statements. The following are present at this video conference: Jânyo Diniz, CEO, John Aguiar, CFO, and Rodrigo Alves, IRO. I would like now to turn over the floor to Mr. Jânyo Diniz, CEO of the company, who will start the presentation. Please, Mr. Jânyo, you can proceed. Hi, everyone, and thank you very much for participating in our results video conference from the second quarter 2024. Please go to slide 4, where we present the main highlights. In Q2, we completed the 2024 first cycle and continued the work reported in Q1. We successfully attracted summer students, especially on our on-site courses, which allowed us important growth in the student base. Operating margins continued evolving well, signaling that we keep absorbing the synergies of our operational optimization plan. Compared to previous quarters, the biggest highlight on Q2 was the financial quality of the results, with a significant increase in net operating cash generation, allowing us more reduction in our financial debt indicators. This way, once more, we are presenting numbers that show solid progress, allowing us to remain cautiously optimistic about the coming quarters, which we will present below. On slide 5, where we present for the last time our already traditional map of operational optimization plan, as we concluded in July, the last real estate planned deliveries, which will provide us the third wave of synergy generation from Q3 on, which will be relevant to help us continue increasing operating margins on the following 2 quarters. From now on, we will dedicate to relevant work on fine-tuning our operations, aiming at ongoing improved results, with efforts on increasingly improving our students' experience, optimizing the course offering, and efficiency in our capital allocation. On slide 6, you can see some numbers that show the operational optimization plan is generating consistent improvement in results. Note the expansion of the gross cash margin of more than 3% and the adjusted EBITDA margin of almost 3 percentage points, comparing with the first 2 quarters 2022, which was the period before this project started, consistently changing our company, achieving results that allowed us to be much more competitive. The good news is these results do not yet encompass the third stage of the plan, giving us confidence that our strategy has generated positive results and that we will still have levers to continue improving our performance. This year is also relevant from a regulatory point of view, especially because of the favorable decision we received from ADC 81, which discussed the constitutionality of Article 3 of the Mais Médicos ruling. As shown on slide 7, this decision standardized the procedure to be adopted for the evolution of 13 administrative processes for the accreditation of new medical courses we have in progress with the Ministry of Education. Since the Supreme Court's decision, we currently have 360 new annual medical spots. Half of that through a favorable conclusion through the Ministry of Education ordinance in 3 administrative processes, and the other half through judicial decisions, which are still preliminary and not yet final. As a result, Ser Educational increased its offer of medical course places from 521 annual places in Q1 23 to 881 annual places at the moment, representing an increase of 69% when comparing the two periods. On slide 9, we show the operational results for the period, which are the results of student intake. As you can see, in hybrid courses, we closed the semester with an even better enrollment performance compared to Q1. This was mainly due to the delay in FIES, the Educational Financing Program, which was delayed from Q1 to Q2. In digital courses funding, they dropped, mainly due to the more competitive scenario in this market. On slide 10, we present the quarterly comparison of our average ticket, which had a slight reduction compared to last year when we individually analyzed the offer modalities. The average hybrid education graduation ticket in Q2 24 fell 1.2% compared to Q2 23, mainly due to the discounts offered in the intake processes of previous campaigns and the increase in students' prompt on-time payment, reflecting the reduction in the average ticket. These effects were partially offset by the increase in the average enrollment ticket in 24.1 and the student enrollment increase for health courses. In digital courses, there was a drop in the average ticket because of increased discounts. That happened because of an enhanced commercial market competitiveness in the period. The average ticket overall increased by just over 3% as the share of hybrid learning in the total student base was higher. On slide 11, we present the evolution of our student base, where we can see that hybrid teaching led to the organic growth of the total student base, even with the reduction in digital courses. Hybrid courses became more relevant to the total base, practically dividing our student base between hybrid and digital learning. Moving on to slide 12, we present this base distributed by area of knowledge, showing an increase in participation in health courses. This is the result of our strategy of focusing on the courses with highest average ticket and greatest competitive advantage, due to our unique value proposition to students consisting of providing quality teaching for courses with high market demand, with quality infrastructure through brands recognized by society in the job market at competitive prices in line with the market. These were my preliminary comments, and now I hand it over to our financial director, João Guiar, so he can comment on the quarter's results. Thank you, Janio. On slide 14, we present Q2 summary results. This quarter had consistent results, even with a less robust gain in operational and financial margins. This happened because the main cost and expense optimization movements occurred in June of last year, and now we can compare them better. Now I'd like to discuss the results quality with fewer adjustments of non-recurring effects, a significant improvement in our net profit, better regeneration of operating cash, and a reduction in financial leverage of net debt, as I will present. On slide 15, we note hybrid courses continue being more important in our results because of the operational adjustments we made, which were concentrated in this type of offering. Another highlight is the regular contribution of digital courses, proving to be paramount for our company, along with the medical courses. This will be a new avenue of growth due to the new medical spots we have obtained recently. On slide 16, we show the average period of account receivable, which improved slightly in Q2 due to the punctual student payment. It's worth noting that on Q2, even with a high nominal PDD, it has already showed a slight reduction as a percentage of net revenue. So we are more confident the PDD increase cycle is maturing as we continue to observe solid performance indicator. It will be possible for us to have less need for provisioning in the coming periods. This better dynamics of student punctuality can be more easily observed on slide 17. which showed a solid improvement in cash generation and conversion of EBITDA into cash, with an important increase of 35% in net cash generation comparing both periods. This is an important result because one of objectives for 24, in addition to improving our operating and financial margin, we also aim at improving the quality of the results, especially on cash generation, which was achieved because of the implementation of new policies, re-enrollment, and recovery of outstanding monthly fees. On slide 18, we show another quarter of significant reduction in financial leverage in nominal debt. We started this project with a net debt EBITDA indicator of 2.68 in 2022, and now we have reached 1.93 times. This is an important movement that is already being reflected in increased profitability, as we have already observed this quarter. On slide 19, we detail our CapEx, which had a first half of the year with more investments than we are used to making historically. This increase mainly refers to the work we carried out to finalize the return of real estate this semester, especially to adapting spaces in Recife for our new administrative center, having new laboratories and creating digital content. With this work completed and less need for investments in content and laboratories for the second half of the year, we believe we will need to invest less and thus maintain our final investment level for the year closest to our history. These were my comments on the results, and now I hand it over to Jânyo so he can make his final considerations. Thank you, João. And to conclude our presentation before opening for the Q&A, I believe this presentation summarizes well not only our recent evolution, the result of all the operational optimization efforts we have carried out in recent quarters. It also demonstrates that we are ready to continue our journey of profitable growth. We face a new round of operational synergies and growth avenues to be captured in the coming quarters. With the completion of the last stage of the operational optimization plan, which we achieved, including the growth of the hybrid courses student base and solid profitability of digital education. In addition, we have new levers for generating growth, including an increase in the annual vacancy base for recently authorized medical courses, combined with the organic growth of our undergraduate courses, which will be very important for our future, will help generate results. Cash, while strengthening our unique value proposition and students, competitive and with the ability to maintain and even expanded participation in the markets we operate in. We are focused on achieving our objectives for the year, preparing to enter 2025 with an even more organized company, ready to continue growing with profitability and quality of teaching. These were my initial considerations, and we are available for our Q&A section. Now we will start the Q&A session for investors and analysts. If you would like to ask a question, please press the reaction button and then click on raise your hand. If your question is answered, you can leave the queue by clicking on down hand. Our next question comes from Marcelo Santos from JP Morgan. Thank you, everyone. Thank you for letting me ask a question. I have two. First, in the medical courses, what should we expect a ramping up in these courses? Would we start an entrance examination exam now? Would you have more spots now? How would you have the evolution of this growth lever? The second question is, what are the main levers? I know you talked about it, but the third stage of the plan, this third cycle, what are the main levers that you should have a better margin? Good morning. Thank you for the question. As for medical courses, we had 3 units. As the ruling of Ministry of Education, we have this for the beginning of our courses. We already have these 6 courses. This is ongoing. We expect now to have these courses, having all the spots uh, done. Now we wish to offer 60 spots every year with these three courses, having the overall 180 spots. So we are going to present 60 spots now. In Q1 2025, we will have the other 60 spots. Only to answer the second question, I think there are three levels of results for the semester. The commercial process of the year was positive. This happens, and how it's mid-process to winter intake, the rest of the year will also be positive, as we observed in Qs 1 and 2 in cash generation. The second level is the additional spots for the medical courses. Every spot will be included in the entrance examination, and this will happen as increasing the revenue. The third is the delivery of these two real estate. And we will help a lot to have a new wave of reduction. And also the cost of it, because there are indirect costs of our operations. So I'd say these three uh, opportunities are the greatest ones we have. The fourth component will be concluding winter student intake. And we believe we are in the right path. And we are in the middle of this process. And this will corroborate the offer of the first semester. Thank you, Rodrigo. In the intake, student intake, you said you are in the middle of the process and we'll have a positive year. Can we expect a result similar to the first two quarters? The dynamic is a bit different. For us, digital courses are growing better. In-person courses are also positive, but I can say last year we had been a strong comparison. This would be the second year in a row that would have a growth student intake of in-person courses. The two processes are going well. Digital one is better than in-person one, but we still have important path to go to. The second week of August, we will start classes for the fresh student, the new students, and we are going to have students for the funding FIES students, and this will complement the second part of the process, but we show a trend that makes us comfortable because cash revenue generation is in the right path to acquire, to get the results we expect. Okay, thank you so much. Next question comes from Leandro Bastos from Citi. Hi, everyone. Thank you so much. There are two questions. On the ticket-wise, you told us in the first semester you saw more competitiveness. I would like to ask you, what do you see on competitiveness for this cycle, both digital and in-person student learning? The second, about the medicine spots, can you talk about the tickets for the regions? Have you been working on that? Thank you. So about medical courses, it's very similar. The ticket is about almost 10,000 reais. As for the average ticket, it's it's going on at what was expected. It's a bit higher, but this hasn't been affecting the student intake. The student intake is good, even comparing with the in-person courses and student base of the first 2 quarters. Let me tell you something. The ticket has a component that is aligned with the improved PDD, which is about student paying on time. Students are using this campaign of tickets to pay on time. And the more veteran students, which is our largest student base, this end up diminishing the average ticket. And this will end up masking our student intake. We are improving the intake of students, and we are promoting this improvement on the average ticket. But this is a bit masked because it's kind of being offset because students are paying on time. Another point being masked by it is the improvement of our course mix. We have an increase on the health courses. So improving health courses and improving intake, this makes us more hopeful from now on, being a lever of growth. However, this movement we saw in payment has been compensating negatively on on hand and improving our cash on the other. Thank you. Next question. Lucas Nagano, Morgan Stanley. Hi, everyone. Thank you for letting me ask questions. We have 2 questions as well. First of all, about the medical courses. As I understood, you do not have problems to fill these spots. And on regulatory point of view, is there a risk to lose these spots because of the Supreme Court ruling? Are you having some time of special provisioning on that matter? The second question about the PDD. PDD is stable on this quarter, but it's still high. When do you expect to start reducing the PDD? Thank you. Lucas, about the spots on medical courses. The classes started this week of the groups that are already formed. If there are some changes about having a ruling about these credentials, the idea is to continue with our resources, with our administrative provisionings, with the ruling. But this doesn't mean the end of the process. As it is an administrative process that happens because of judicial demand, we can continue this process and we can question some points that could be identified as inconsistencies because of a ruling. Meanwhile, the classes are on, and these courses will generate social and local impacts. The idea is to keep with these rulings that are on in the Ministry of Education. We will continue our work on regulatory matters until its end. And this can take some time. A negative ruling will finish these courses. We have some of them that are already accepted by the Ministry of Education. Thank you for the question. As for PDD, we are talking about it in the last 3 results meeting. PDD has been through an accommodation process as for the pandemics. that process during the pandemics of students negotiating their debt, students having problems in paying, and this debt was being rolled out until the end of the pandemic and beginning of 23. When these debts are continuing 2-3 years, we are having a worse PDD. We are having a higher level that we foresaw in this process of maturing in the pandemic process. More and more, I see, because of the current behavior of students paying more on time, they are paying the negotiation of delayed tickets. We are asking students to pay, especially after the pandemics. We have a policy of negotiation more contundent. Students are paying more, and we have been working with the students that are finalizing their provisioning so that we can have the tickets paid, and we are being more aggressive on that. Because of it, the PDD level with the percentage of revenue, the PDD will drop. I believe for the digital courses, they are strong in our student base, but the courses have better quality. PDD dropping, the percentage of revenue will be better. So we have a more mature level with a high level. Now we have been working on this drop, and we will have more quality on our revenue. This is so clear. On medical courses, do you have a plan of reparation if at the end the students cannot graduate because of these spots that could be denied? As we told you, a part of the courses were accepted by Ministry of Education, and other ones have been working on the limits of law. There's no necessity of have legal reparation because of it. If in the worst of scenarios, this court order is denied and we cannot retrieve these spots, the students would be transferred to another course because they are regularly enrolled in an institution that is legally authorized to operate. Eventually, if this court order is denied, they would be transferred. But we believe that we have the right of working, and we believe it will be approved. We know that legal things have both sides, but today, to ratify it, we have been operating with every courses, even the ones by court order and even the ones accepted by Ministry of Education, have been operating within the law boundaries. Okay, thank you so much. Next question comes from Felipe Amancio, Itaú BBA. Hi, everyone. Thank you for answering my questions. I have also two questions. First of all, in the market, we see improved marketing resources, effort, and we see more expenditures on that matter. Are you going to explore this strategy? And second question about evasion. We saw an improvement 1.4% of evasion in a hybrid course. Can you comment on this reduction? Do you have discounts and negotiation for students? I would like to understand up to what point we are going to have an evasion of students. It doesn't have impact on the base improvement, but I would like to understand how you are dealing with that. So, Felipe, let me answer about marketing, and Aguiar is going to talk about the evasion, okay? On marketing, we have worked from 22 to 23 very hard to organize our portfolio and reorganize our brand. We reduced some brands that had operations only on specific counties, and we are using the more recognized brand in the regions. And for the courses in the hybrid base, it offers basically the law course, humanities course, and the other courses are health courses. We have changes in portfolio city by city, but this is the work we have achieved in-person courses. And the humanity courses that had lower tickets, they are offered digitally, and they have 30% of hours in person. If you observe the comparison of market expenses per revenue between 22 and 23, we can notice a relevant drop. And this is stabilized in the first Q. And as for second Q, we have an increase, but it's not necessarily a market operation. It is a necessity that came from the delayed offer and FIES schedule. So we need to have a campaign that is not usually in Q3 because of this FIES. And we also had the credentials of courses in June. So we have a specific campaign for these courses in the second quarter. This made us have a change in the level of marketing investment in Q2 that was a bit different in seasonality. Thank you for the question, Philippe. This slight reduction in evasion, SPDD, I think this is a kind of accommodation of the market. We have a stricter policy of negotiation of the delay, and we saw that the students are paying more. We believe that this is an accommodation of the students that joined us more recently, and they have been trying to negotiate their debts. And we are trying to collect more credit. So in a way, we are considering better the students that are paying better over the students that have been trying to negotiate without paying anything. So this qualification in our student base will be developed for the second semester. I think it will be relevant in the Q1 next year because the improvement of earnings on part of the students and the improvement of our economy. So PDD will stabilize. This is what we see. Perfect. Thank you so much. Good morning. Next question, Mirela Oliveira, Bank of America. Good morning, Rodrigo, Janio, and everyone. Two follow-ups on our side. First of all, as for PDD, can you comment a bit on the first quarter? It has been stabilizing below 10%. Q2, we have seen a part of this improvement. Could you comment on the levels you see it will be stabilized at long term? And the second one is as for medical courses. How have you been dealing with the negative on court orders? in Salvador, and how long do you think these court orders, how long do they take to be solved and having a final solution? Thank you for the question. We have been discussing the consolidation of the maturation process of PDD. As we have been discussing by the end of last year, our expectation that PDD will bring around 8% of the net revenue from now on. This is a level up slightly above what we used to make before the pandemics, but on our way, we have a higher participation in digital courses. We will have more default. We have more efforts to ask for students to pay. But the courses with more added value, we are having a better payment on the students. So the movement to reduce PDD as for revenue, we think it will be about 8% of net revenue of overall courses. We believe this accommodation will happen from the second semester, the following 3 Qs, 2 in 24 and 1 in 25. Mirela, as for medical courses in Salvador, there are 2 paths to be followed, and we are on both of them. First of all, this is an administrative process. This appeal is an administrative one. And the second is legal, judicial one. We are going this through 2 paths. We do not know when this is going to happen. But we are going to follow every proceedings the legislation allows us to. Administrative and judicial. In the medical courses, the ruling in Salvador was basically done because the Ministry of Education is following 2 paths. It's inaudible. I'm sorry, I had a problem here and I muted myself by accident. On judicial path, ministries considering the number of people under court order. These 2 criteria has been discussed because this is AGU ruling. They said the court orders cannot affect proceedings done before it. So we have 2 processes, one administrative, one judicial one. We expect to have a positive result. We need to wait and see what is going to happen. And we cannot say when it's going to happen. It's unknown. Okay, perfect. Thank you so much. Next question comes from Caio Moscardini, Santander. Hi, everyone. Good morning. Thank you so much. I would like to understand better the demand of social FIES, the social funding. Can you realize the kind of student, if these students are more engaged or if they are going to evade? The second question about CAPEX, it's very high in this quarter. I would like to understand how you would have a forecast as for CAPEX in the future. Caio, the social funding, the social FIES didn't have great traction in the second quarter. We had a schedule of student intake that was delayed. It was late. It helped in the volume of the second quarter. We had a lower intake. To have a clear view on how this program will behave, I'd say that only now in this half of the year we will know better. It was a great delay we had on the schedule, and we couldn't realize the kind of student we brought and how sustainable, they will be here. When they joined the university, the classes were already on for quite some time, and they ended up not being adjusted to the program in the first half of the year. Perfect. Thank you, Caio. Thank you for your question. As for CAPEX, there are three components. First of all, we have efforts to have every unit relating to these approvals ready for the second half of the year. We are basically talking about 7 units. They are already ready for that. So we have 7 units with medical courses, and the other ones we are keeping the investment done to be able to support authorizations that may happen in the second half of the year. So this movement of the medical courses, they are heavier on the CAPEX. The second movement was an initiative, an important movement. We are going to deliver another building, and we are having the administrative center nearer for our main operation in Recife, in a different model, a much more modern one, and more compact as well. The teams are closer to each other. So this also brought this additional CAPEX factor. And the third is digital content. We have been finalizing our quarter, so we have a strong investment in this organization. But moving forward on the second half of the year, we are going back to levels according to our track record, 5-6% of the net revenue max. This is what we are not expecting big investments as for CAPEX. Okay, Rodrigo, João, thank you so much. Let me remind you to ask questions, just click on raise your hand button. The Q&A session is closed. We would like to give the floor to Mr. Jânio Diniz to make the company's final remarks. Thank you so much for being part of this results meeting, and our investor relations area is available to help you with further clarification. Thank you so much and have a nice day. Ser Educational's video conference is closed. We appreciate everyone's participation and have a nice day.